guys? Michael Everett here with True Trading Group. January 4th, wild, crazy day in CNET. Stock ran over 700% in a single day, up 288% from my buy alert in the morning at $3.07, and the stock ended up hitting a high at $11.90. Just an absolute monster move. And welcome to 2018. I spoke about pre-market in our game plan today that I expected today for us to start to get follow through, for us to start to get some continuation moves, because the first trading day of the year, the second trading day of the year, usually there's like a new year hangover. So I talked to our members about expect a slow day, take profits quicker, maybe even take your scale back on your position size and be tight with your stop losses, because I expected slow days. And we saw slow days. Tuesday and Wednesday, the first 2 days of the trading year in 2018 were slow. Okay, I had a very small gain on Tuesday, and then I took a small loss on Wednesday, and now a nice big green day on Thursday, as we caught follow through in several stocks, not just this CNET. We also caught HTGM, was another really, really great trade, breaking through a major resistance level on the daily that we were able to capitalize on. But for the sake of this video lesson, I'm just going to focus on CNET, the stock every trader was talking about today. And I'm going to get right to the chart, and I'm going to show you why I was able to call a buy alert on the CNET super early. I'll take you guys to my trade announcement. Here it is at 11:03 a.m. long CNET at 307, stop loss 290. Very, very low risk trade on this setup. And I'm going to walk you through the chart. Never mind this explosion of a move. This was a short squeeze. It was a massive short squeeze. I'll get into why that short squeeze happened later in this video. But let's talk about my entry, because this is a great pattern to go after regardless of this massive move the stock had in the morning. Nobody expected to see that much of an increase and that much of a move. So here is this CNET, okay? And a pattern that I want you to start recognizing is the double bottom gap up, okay? And it occurs when a strong stock gaps up, puts in that initial low on the gap, then it pushes higher, okay, makes new highs, and then starts to pull its way back in. When the stock pulls its way back in and gets in here and starts to break back below VWAP, a lot of traders forget about it, okay? A lot of traders say, stock's weak, it couldn't hold the breakout, it's pulling back below VWAP, it's going to test the low, I'm done with it. Don't be one of those traders, because you would have missed out on 288% in total gains, okay? Look for a strong stock that gaps up in the morning, puts in that initial low, pushes to new highs, and then starts to pull back. Watch for it to hold support at that initial morning low. This double bottom support at the initial morning low is an excellent area to look to get long if you see an increase in volume when the stock bounces off the low. Okay, you can see right here, it's the slightest little increase in volume, but nonetheless, it's an increase in volume from the last 45 minutes of trading when the stock bounced off of that support level right here. Okay, and then you can see from my trade announcement at 11:03, I got long at $3.07. That is right there. So here it is, guys, me getting long at $3.07 right here, okay, risking a very small amount, and then the trigger on this trade. Okay, when you see that double bottom support and you get long as the stock bounces off that support level, the trigger is a break above VWAP on a nice strong increase in volume. And there it is. So here's my entry. I'll delete that to make this easier. And here's the break above that VWAP, that orange line on my screen, on an increase in volume. That is your trigger in the trade. Okay, that ignites the trade. Your signal of confirmation, where you can really get confident, is that test of the VWAP. You can see the VWAP was resistance. Okay, after it broke through it, you see it pull in and hold support above that VWAP. Once the stock did that, that's your confirmation. We're about to go. Okay, and then from that point on, you see CNET make its move up here, test the high of the day right here, pull in, and then boom, break through the high of the day again on a real nice strong increase in volume. Never even pulled back to test that high. That's how strong the stock was. Usually you'll see the stock break and pull in into here and do, one of these and test that previous high, but it didn't even get down there. Okay, that's how strong the stock was, and then it just started to continue to push. Now, I was out of this trade by already, guys. I locked about 21% gains on the trade. I was very happy with the trade because I had large position size because the stock was trading very heavy volume, and I loved the pattern. And then once I got the confirmation, I was able to sink my teeth into the trade, and I was able to pull 21% out on a large position. So I had a really nice win. I left tens of thousands of dollars on the table because the stock ended up running to $11.90. But that's fine. Okay, I didn't expect the stock to make that kind of a move. It's a short squeeze. These type of moves come around maybe once a month. You can't expect stocks to make moves like that. You can just be prepared for when they start to give you those clues. But I'm still extremely happy with the trade that I made on this CNET. And now let me take you into the short squeeze part of this trade. For that, I'll pan out. Okay, and now you can see right here. Let me delete all these other lines. Okay, now you can see after the stock broke through that new high again on strong volume, look at the stock hold support above that previous high. Now, what happened in this CNET was a short squeeze. This stock was trading huge volume all day long, okay? They came out with the news in the morning. They partnered with a company in China, guys, and the stock just absolutely went crazy. But what you saw happen in the afternoon was a short squeeze. And you got that squeeze when shorts started to come in and short this in front of this $5 level, expecting the stock to pull in during lunchtime. Stocks tend to pull in during lunchtime, okay, when volume slows down. I think shorts probably thought they were going to be able to push this back down to this VWAP, and they were not able to. You see the stock just traded sideways, and all throughout lunchtime, from 12 noon all the way until 2:15, the stock traded above that previous morning high. So here's that previous morning high, and you see the stock held above that level all throughout lunchtime. I always tell our members in TTG, when you're looking for potential afternoon setups, you look for stocks that are holding above a support level all throughout lunchtime. That support level can be one of many things. It can be the VWAP. It can be the 38.2 Fibonacci retracement level. It can be the previous morning high. In the case of CNET, the previous morning high. Okay? And once the shorts realize that we're coming out of lunchtime, when volume typically comes back into strong stocks, and boom, short squeeze. Stock breaks out, makes a new high, strong volume comes in down here, and then as I pan this out, you see the crazy, ridiculous move the stock made all the way up to a high of $11.90, 288% from my buy alert at 307, well over 700% on the day if you factor in the gap up from early in the morning. Okay, just a monster day for the CNET, and there's multiple lessons throughout this trade. The one I want you to focus on the most is the entry in the morning with that double bottom on that gap up and then the break above VWAP. That's the lesson to take away. Yes, the short squeeze was great, but Stocks don't do that often. Okay, you're much better off looking for that double bottom support off the gap up, because that does happen frequently. And if you can catch 20% gains off of that, you'll make way more money over the length of your career, trust me, than catching one short squeeze throughout the course of a month. Okay, but nonetheless, guys, awesome trade in the CNET. So many members capitalized on this trade. It was an absolute beast. And volatility and continuation and follow through is definitely back. I said that in our pre-market game plan to expect follow through today. The FOMC minutes we were waiting for those yesterday. That's why yesterday was a little bit slower. And now today we're right back to the wild, crazy action of the small cap market. What a time to be a trader. Welcome to 2018. I'll see you guys in chat tomorrow.